Started. Commissioner, would you like to come on up? We have the Department of Labor first.
Congressman, you sit right there.
Well, good morning, Chairman. Is this on? Okay. Little red light's not on, so. It's probably broken. Okay, well, we'll try to keep this, because I know you guys have got a very busy morning. We'll try to keep this as brief as possible. And basically just cover the changes, and then also kind of give you kind of a brief update of what's been going on during this budget year, let you know where taxpayers' money is being spent. As far as the budget goes for the amended, there's only one slight change, and it had to do with it actually had to do with a bond request that we had put in for the big budget, where we had some facilities issues that we were needing to take a look at. One of them was for a study for the facilities that we do own, because over the last decade and a half, we've let a lot of deferred maintenance kind of go by due to very strict budgets. And so we were going to have an assessment done of those, so that way we could come back at a later date and have a firm figure of what needed to be done to get those buildings up to date. Issues, things like parking lots, electrical systems, plumbing, roofs, etc. It's about $10,000 per location, and that seems like a lot, but when you have to bring in several different contractors to come in and take a look at the different systems, because you usually don't have one in particular that's going to be an expert in all the different areas. Matter of fact, in some cases, some of the areas we know that we're going to have to do some technology upgrades due to the fact of some of the new technology that we've been rolling out ourselves. And so some of the bandwidth that we have, especially in our more rural areas, is not quite up to date, and we're going to have to make some changes there too. And that's also a part of that assessment. So that's what the $150,000 is for. It originally was supposed to be bonded, but they came back, I guess, due to the fact that there was some extra money. They thought it would be more efficient just to go ahead and do that in cash instead of doing a bond next year. We're in agreement with that, just because of the fact that it's something that we need to move on a lot quicker. And sometimes when you bond stuff, it takes it even longer. And that was kind of their thinking also, is we could get to this process a lot quicker than if we had cash and if we bonded it. And so that's really the biggest change in the amended. As far as things kind of get you caught up on, this last year, I think y'all remember when we talked about getting the additional money put in the budget for our customized recruitment program to help expand it, to help with economic development. That program had a very good year. We were very busy. We had over 23 new employers in which we came in and were used, which represented about 256 job orders. Now, that's not 256 jobs, that's job orders. Most of those job orders were for multiple positions. We actually screened for the new employers coming in Georgia over 13,000 job applicants, and through those 13,000, we referred almost 1,200 to the new employers that were actually qualified for those positions. So you can see where we saved a lot of these new employers thousands and thousands of dollars. If you take a look at going from 13,000 applicants down to 1,200 applicants, that's a lot of time savings, and that's the feedback that we got from these new employers. We were able to put at least the ones that they were reported back to us, and this is a very, very conservative number. Over 1,000 individuals were put into work in these new employers. Now, that's just the ones that were reported back. Obviously, that number is probably a lot higher. Because there's not a requirement that they have to tell us when they hire somebody that we refer to them, but a lot of them do report that back. We wish we had a little bit better number on that, but we're not in the business of forcing them to tell us. But we're quite certain that most of the people that we're referring are getting a job there or one of the other ones. We also had 63 job fairs that same group also assisted in, and we had over 17,000 attendees in these job expos. Now, we had hundreds, literally hundreds of more smaller job hiring events around the state that were individualized for current employers that are already here, that we had in our career centers that we hosted. Things like maybe a local business that was needing 10 or 15, we let them use our facility, and this same crew they assisted on those also. We've also had a lot of technology upgrades this past year, a very long list. We're trying to invest back in our agency, so that way that we can become more efficient and kind of, when I say get up into the 90s, and then we're going to try to get into the next century. We do have a new a website that has gone live in the last year, our Employee Georgia, which is something that we've been working on for some time, which has become a great tool to help individuals find work. Matter of fact, as of last month, we had over 65,000 new job postings just in the month of December in the state of Georgia. So that's tremendous. And so we have a lot, our biggest concentration right now in the Department of Labor is actually helping getting individuals back to work. The unemployment rate is really actually not the most important thing we're looking at. We're more concerned about these tens of thousands of job openings that we have right now. We have to make sure we get those filled, because that can have even a more a negative impact on your economic development if you cannot fill those current job openings. So we're shifting a lot of our resources toward that end. And also a quick update, the trust fund has continued to get stronger. Matter of fact, at the end of the year, we have well over $900 million in the bank. So we're almost at the halfway point of getting to what I would call solvency. Hopefully by this time next year, we're going to have a report to you that we're right at $2 billion, and what we think solvency is going to be due to how our workforce has gotten larger is going to be somewhere in the neighborhood of $2.5 billion is what we need to have in that trust fund to make sure that we don't get in the shape that we were last time. Any other questions?
Any questions from the members? What number are you, 21? Representative Dickey, is that right?
Thank you, Commissioner. I appreciate the good work your department does. Talking about this 150,000 assessment, I assume some of your locations, I don't know how many locations y'all have throughout the state, but I assume some of them are owned by the department, some are leased, rented, I guess different contracts. So you're going to look at the ones the state owns?
Right.
How many is that? You got a guess?
It's 15.
Just 15.
And that's not including our location here downtown, which
Right.
also has significant amount of deferred maintenance that we're, trying to check off the box as we kind of go. Because our office here downtown is over 50 years old. And there's obviously, we have some issues. We have done some repairs here recently. We had some fairly serious issues with our parking deck. Matter of fact, we had thought one time that it might have been to the point where we would have to possibly replace that parking deck, but however, we had an instructional engineer come in and said it was okay, that they just need to have some light. Well, it wasn't light when he wrote the check for the bill, but we had to do some repair on that also.
Thank you.
50.
Representative Martin, Chairman Martin.
Thank you, Commissioner. Thank you, Commissioner. I feel like I'm ringing.
Thank you, Commissioner. Just a quick question. We'll try again. That's what I was wondering. I mean, I was under the impression, we had this with the Georgia Building Authority, and maybe we can talk to them at a later date, but when we had the judicial building over here a number of years ago, when there were repairs there, built into the rent that they pay is supposed to be some semblance of ongoing maintenance to do things. To
Well,
fix
we
those.
don't. We on our buildings, the agreement that we have, we don't pay rent.
Okay, so you don't pay them any kind of, okay, that was the question. Thank you.
Yeah. We
Got it.
still actually the buildings that we have are actually deeded in Department of Labor's name,
Got it.
because they were bought with federal monies.
No, that's fine. That's why I wanted you to refresh me on that. Thank you.
Any other questions by members? Thank you, Commissioner.
Thank you, Chairman.
All right, next up is the Department of Insurance. I'm sorry, members, I meant to say this before. The pages in your 2016 amended book are 132 through 134 for insurance. 132 through 134. What? I don't know. Maybe that way. Oh, that helped. Y'all are so smart. Mr. Commissioner, how are you?
I'm wonderful. How are you?
I'm well. Glad to see you.
I'm glad to be seen. Better to be seen than be viewed.
That's right. All right, whenever you're ready.
I'm ready. Thank you for this opportunity to come and be before you. And we've looked at the governor's recommendations for the amended fiscal year 2016 budget, and we're in total agreement. And so I'm going to just tell you that our motto this year is leave me alone. Be glad to answer any questions you have.
Any questions?
Mr. Commissioner, I meant to ask Commissioner Butler this. Did you, at the end of last year, and I know it's in our documents, we haven't been able to go through them all yet. Did you lapse any money back to the state that you had unspent from FY 2015?
Yeah, about $150,000.
Okay, thank you.
All right. Thank you for your time.
Thank you, ma'am. Boy, this is y'all are wonderful.
Carry on. See you soon.
Workers' Compensation Board, members were on pages 209 and 210. 209 and 210. I say that. I'm not sure if we have anyone here yet. We're a little early.
Maybe we reduce their budget.
For every minute,
1%.
We may take on Department of Audits. Are y'all ready? Okay. Pages 37 and 39, or through 39, excuse me.
We could give them the money we take from
Mr. Griffin,
Good morning.
good to
Madam.
see you this morning.
Good to see you as well.
Good morning.
Good morning. Ready to start?
We're ready.
All right. Well, thank you also for the opportunity to be here today. With me is Carol Schwinney, our Director of the Administration Group, and we're here to discuss our amended 16 budget as well and respond to any questions you might have. Regarding our budget, again, I think it's on page 37. We've got a total budget of about $37.5 million that supports a staff of 290 employees. And first of all, I want to thank you all and members of the committee for working with us last year on our 16 budget. If you recall, you allocated funds to us last year for some additional auditors. Pleased to report that we filled those positions very quickly in the beginning of July, and we are currently pretty much fully staffed as a department. For amended 16, we basically have a clean sheet similar to the Commissioner of Insurance, and we're not requesting any changes be made to our fiscal year 16 budget. So thank you, and be glad to respond to any questions you might have.
Any questions?
Did you lapse any money at the end of last year?
We did, about 45.
45%. Thank you.
Okay.
I'm sorry, Madam Chairman.
No.
I'm sorry to be recognized.
No worries. Let's see. Can you speak to the previous relationship that Audits has had with the Lottery Corporation and the subsequent conclusion to end the relationship, and how does that affect the 2016 year?
For 2016, so we had a contract that we were working with the lottery group to do audits on their COAM operations, which essentially we were doing cash audits out in the at the various locations, and we are planning not to continue that work this current year. That was a billing arrangement, so whatever staff and work we had, we billed. We currently don't have any staff on board, and in discussing that with the head of the Lottery Corporation, we currently have decided not to continue that work. It's difficult to, it's a staffing issue to get folks in and actually keep those folks for any length of time. So we decided to suspend that operation.
Senator Hill.
Thank you, Madam Chair. I think what I heard you say in that is you said it's a staffing issue, it's difficult to keep folks in and all. Does that translate into you're temporarily hiring somebody and it's hard to find those people to do this function with the lottery, or what does that actually mean in, like?
For us, we would hire folks. It's essentially a cash audit. It's after a year or two, it's a career move. You would hire folks and they would want to do something else. You don't want to continue to go out to the gas stations or locations and just count cash. And so we were continuing, basically just rehiring folks to go do that work. So it wasn't a very efficient.
So how does that, if I may, how does that impact your needs moving forward, since you're not?
It does not. It does not. We were hiring folks, and the folks that we did hire, we would bill the Lottery Corporation.
Oh, so it didn't come out of your budget.
It does not
It was
come
paid
out
by
of our
them.
budget. That's correct.
You may not know the answer to this, but how do they plan to perform those functions?
I do not know.
Thank you.
Chairman Martin.
I'm told there's some private companies in Georgia that do audit. I mean, not being flippant, but I think what the gentleman's saying is you're hiring people that would otherwise, maybe even from consulting companies out there, to come on staff for a while, and the lottery would have the opportunity to go directly to those people, take you out as the middleman. Absolutely. Or the middle department, if you will, and go directly to them, maybe even save some money and create some efficiencies in the process. I would hope the lottery would look to accounting firms in the state that do this sort of thing on the other side for the gas stations, because they have the same cash audit, I believe.
That's correct. Better said. Thank you.
That was where I was.
Yeah, better said. Thank you.
Chairman Smith.
So I guess to summarize here, for our general public, they should understand that this is still being audited, but not by y'all. Is that the point here?
I would think so. I guess I would have to ask the Lottery Corporation what their plans are in terms of moving forward. But they should be hiring somebody to do that work, if not us.
Thank you.
I think it's a great move. Privatize it, find someone else that can do it in the private sector. That's what government should be about, really. So, thank you.
That's okay.
Just when did y'all stop that? Just, I don't know if you've said that or not.
August or September of this past year.
And do you report the audits that you were doing back to the lottery, or does it come to us, or both? Or
those reports went directly to the Lottery Corporation and were used in basically in hearings with the operators.
And are you at liberty to say were those audits passing or failing, or can you comment?
I don't believe were those are confidential.
Just
I'm
curious.
not sure. I don't know.
Okay.
I would need to check on that. Generally, they've been confidential.
Thank you.
Any other questions? Thank you.
Thank you.
We still 8:20. Workers' comp. Anyone yet? Department of Banking and Finance, come on up. All right, members, we're on pages 64 through 65. All right, whenever you're ready.
Great. Good morning. Kevin Hagler, Department of Banking and Finance. Honored to be here today. It's been a year since I think we last talked, so I'll give you my kind of elevator speech just to reacquaint you with our department. We regulate 159 state-chartered banks here in Georgia and oversee $208 billion in total assets in that portfolio. Just to give that some context, the Office of the Comptroller of the Currency has around 40 banks in the state of Georgia, and their portfolio represents about $8 billion in total assets. So we completely dominate the state in terms of bank regulation. On a national scale, we're about the 4th largest banking department in the country, behind California, New York, and Massachusetts. So very proud of that fact. We also regulate a lot of credit unions here in the state, 53. The NCUA regulates 73. But even though we have fewer credit unions under supervision, our total assets are around $16 billion versus their $3.5 billion. So our credit unions are a lot larger and more complex than their average is. And then when you look at our non-depository side of our business, we regulate 12,626 money transmitters, mortgage loan originators, sellers of payment instruments, money service businesses of that type. So stay fairly busy throughout the year. Back to the banking angle, the economy is improving quite a bit, as is the banking portfolio. Still, though, we have about 40 banks that are in problem status, which is about a quarter of our portfolio. That's much improved, though, down from I guess a high or a low, depending on how you would describe it, in 2010, when about 2/3 of our portfolio was in trouble status. We still had to close 2 banks in 2015, but that's, again, far improved over where we've been. Still continue to see some merger and acquisition activity in the state. That's a phenomenon countrywide. We had 13 mergers in 2015 with another 5 that have been announced. Not all bad, though. I mean, a lot of it is Georgia banks acquiring other Georgia banks acquiring out-of-state banks, but we have had some where out-of-state have come in, Bank of the Ozarks and Mississippi and Alabama, to name a few states that have encroached. So even though we've lost some of the charters, our total assets has continued to grow, so we have larger and more complex institutions to examine as opposed to more small ones. Give you an idea of the portfolio. It's everything from community banks in your towns to SunTrust, United Community Bank, Fidelity, on down the line. Credit unions, Delta, Associated, Atlanta Postal, Robbins Federal just converted over in the Macon area. So that's kind of what we do in a nutshell. Happy to answer any questions along those lines. In terms of the amended 2016 budget, there's one line item that has shown up in there. It's $1,110. I think it's a pass-through that has something to do with the 1095 reporting that's required under the Affordable Care Act. I think some kind of notification, make sure folks understand they have insurance available to them. But it's not an item that we keep or use.
Chairman Hill.
Thank you again. Thanks for all your work. Banking seems to be going well because they seem to open one about every block where I live. A couple new ones going up. What are the challenges that you see for the near future for y'all, and how can we maybe be a resource?
The biggest challenge that I have as a regulator is manpower. The vast majority of our budget is in human resource. It's people. It's well over 80%. We work alongside the FDIC and the Federal Reserve, depending on which bank it is. Every state charter bank has a federal regulator, and we partner with them. During the crisis, our counterparts were able to balloon up their staff to meet the extra demands, because when you have what we consider a 1 or a 2 rated credit union, which are the high ratings bank, rather, you can go every year, every 18 months. You try to risk focus it and maximize resources. When banks become in trouble status, when they're rated a 3, 4, or 5, you're typically going in every 6 months. So your workload could double or triple overnight, like it did when we went into 2008. As all of us experienced, we had budget cuts that restricted us. We were fortunate that we had a federal partner that almost doubled their examination staff. That was helpful in the short term, but the problem is that we're supposed to be a 50-50 balance. Normally we do exams with them every other time, or we go jointly, and you would prefer to be on a 50-50 basis. when we're that understaffed, we wind up sending 1 or 2 people and they send 8 or 9. And the rub comes in is whenever there's differences of opinion as to how we should interpret regulations or what ratings should be. If we're not an equal partner, you kind of lose some of your footing in terms of being able to guide what's best for the institutions in our state. And again, as a strong state rights advocate, I think we fight that battle against the federal government every day. Fast forward to today, and portfolio is improving a lot, but we still have a number of institutions that we're having to look at pretty closely. And our federal counterparts are starting to shed that excess labor force. So we don't have that many to leverage off of, and we're trying to split our exam cycles back out. Both the Senate and the House were extremely helpful to us 2 years ago. Our biggest turnover was in that examiner workforce. We had turnover levels of around 30%, which is just completely unacceptable. It takes 3 years to train an examiner. It takes 5 years before they really are valuable to us, and they're very expensive by that point with all the training that goes into. I think my counterparts in Alabama had run an analysis that said that at that point they have about $150,000 invested in an employee, and we were losing them to other regulators and to the industry. Y'all were kind enough to allow us to move the salaries for the financial examiners and the senior financial examiners up, and that helped a lot. That turnover has dropped down to 22%, and as of right now, knock on wood, it's in single digits, high single digits, but it's been a massive improvement. This will be in the financial year 17 budget, but that when you gave us the increase for those positions, that was for the people that we had in those positions at that time. As we've been successful and we've had more employees promoted into those job codes, we start to run out of money to fund those promotions and that higher level. So we were able to absorb it last year, but coming into the next year, we're going to need a little bit of assistance. So I think again, getting ahead of myself, we have a couple $100,000 in the next budget to help shore that position up. But that's the main thing. When I talk to the industry trade group, what they want is they want us there on equal footing with our federal counterparts, and they want folks to be as trained as possible. They get tired of training new folks all the time, and that money that I'm referring to is those employees that are typically in charge of those exams. And one final note, just as an aside, our budget's around $12 million. The revenue that we bring in from assessments from the banks and the credit unions, as well as Georgia Residential Mortgage Act fees and such, totals about $20 million, $20.5 to $21 million, depending on which year it is. So we operate well within our income stream.
Any other questions? Okay, thank you, Kevin.
Thank you very much.
Workers' comp. We're a little ahead. Very good. We're on pages 209 to 210, members. All right, we're ready when you are.
Okay, we're ready. I'm Frank McKay. I'm the chairman and the chief appellate court judge for the State Board of Workers' Compensation, and Tom Risco is seated next to me. He is our chief financial officer, and I think as of now he's the longest consecutively employed state employee of the state of Georgia at 47 years of continuous service to our great state, and we appreciate him. I want to recognize, seated right behind me is one of our three directors from the state board, Judge Elizabeth Gobeil, and seated to her left is our executive director and chief operating officer, Delise Brooks, from the State Board of Workers' Compensation. So we're glad to be here today. And talking about our supplemental budget, it has remained the same. We're not asking for any additional funds in our budget. You'll notice that the $1,591 has been added, and that's to pay the IRS mandated funded portion of the Affordable Care Act on behalf of the reporting requirements for our agency. The good thing about our ever-increasing state of our economy in Georgia is that the amount of workers' compensation premium has continued to rise ever since it really bottomed out in 2010. It's almost a perfectly shaped bell curve from a high in Georgia of 2006 and 2007, and then significant drop in 2008, 2009, 2010 to 2010 less than $1 billion, and then 2011, 2012, 2013, and 2014 is the most current year that we have full data for, and we'll have more soon for 2015. But that has increased from the bottom of $953 million of workers' compensation premium written in the state to $1.349 billion. And that's a good sign. That's a sign of showing a growing economy, an expanding workforce in Georgia of a little over 3.6 million employees currently employed out of our 10 million population. And with the expanding premium, it allows the board to decrease our percentage of assessment. You know, our budget is funded not from the general state tax dollars, but from the assessments on the insurance companies and self-insured employer portion of their workers' compensation premiums. So with an expanding economy, then we're actually able to decrease our assessment, which is currently 1.105% of an employer's workers' comp premium, or if they're self-insured, their self-insured formula retention basis. So those are some general comments, but with that, we're certainly open for any questions. Financially, we're operating within our budget and did not put in a request for any additional funds.
Chairman Hatchett.
Is the percentage the decrease, is that passed on to companies through their insurance premium, or is it passed on directly through your department? How does that?
It comes directly from our department.
Okay.
We get reports from the insurance companies, which they're currently, we have a really good workers' comp market in the state of Georgia. There are about 410 insurance companies that are licensed by the insurance commissioner's office, and I saw Mr. Hudgens as I passed him as I was walking over here, that they have licensed and approved to write workers' comp in Georgia. So it gives us a competitive market. But we get the data reports from them as to the dollar amounts of premium that are written in Georgia, and then we're able to take that and figure out the assessment that we assess based on that.
So the insurance companies pass that on to our companies?
Well, the employers are the ones that get the assessment direct from us.
Okay.
And then the insurance company, I'm sure they do.
Okay. Just asking.
Chairman Hill.
Thank you again. Good to see you. Thanks for being here.
Thank you.
I think this is a related question. What makes up the revenue from which the payment to the Treasury is made? Is that the premiums from the employers? What makes up the? You've got a $2,076,444 is a reduction in the payment to the Office of the State Treasurer. Basically, that $4.1 million down into the $2 million. Can you speak to that?
I can,
Please.
and that has been, as I understand the history of that, has gone back to about 1992, of all varying amounts that were put in our budget.
I guess while you're looking there,
And,
maybe also what's impacting those trends, and what's, because it's gone down from 2012 5.6 million. It's continued to ratchet down. You're
Right.
projecting, I think, around 2 million in 2017 FY.
And we've worked with OPB. I mean, we've looked at it as we've paid our share. It's out of our budget, out of our funds. It comes out of that assessment, is paid into the general state treasury. And we have paid that. There is some thought and movement. I mean, we're always conscious of that it really should be kind of continuing down, because it has been zero as far as recently as 2002.
Is there some formula that's applied? Is where I'm kind of getting at.
Not the formula.
All right, why was it 0 in 2002 and then in 2012 it's 5.6? I guess it's because of higher claims, perhaps?
It's not because of the higher.
What bounces it around?
The higher claims. At one time it was because the history was related to me was when our economy was really bottoming out and the state was under severe budget concerns. My understanding is this was added into our budget.
And now it's continuing to reduce. I mean,
As I think it's appropriate.
Decline.
I mean, we're fully supportive of that, and it's been gradually reduced and then a much larger reduction this year. And I would anticipate that next year as well.
Okay. Thank you.
All right. Anyone else? Okay. Thank you very much.
Okay, thank you.
The wrong. Members, we're going to need to be at ease for about 10 minutes because there's a separate Senate subcommittee that'll be coming in to hear the next presentations. And so we just need to wait for them till about 8:50. I don't know. All right, let's get this meeting going again. Forgive our delay. Senator, we've moved very quickly this morning, and
I heard that. If you told me you was ready, I would.
well, we are just thrilled to have you. This wonderful working relationship that we have. We now have the governor's office, and Miss Teresa McCartney is here to talk to us further about it. Members, we are on pages 117 through 120.
Good morning. There are only two adjustments in the amended budget for the governor's office. The first and the largest item is $10 million for the governor's emergency fund. This really is driven based on the water litigation. We do pay our legal fees out of the emergency fund. In the current year, we've done 2 executive orders around water litigation, and we've moved about $10 million. So we have a remaining balance of slightly over $1 million. In the 15 emergency fund, we did utilize 100% of the funds, and in 14, I think we lapsed $662. So we do feel that the $10 million is critical to ensure that we can continue to pay our litigation funds. The other item in the budget is a little, almost $5,000 around ACA reporting. You'll see this throughout the budget, and this is to comply with the ACA regulations that we have to provide state employees with a 1095 form to be able to verify health insurance. And we've been working very closely with the state accounting office to ensure that we meet that requirement. As a state, if we do not provide the information to our employees, that we have the potential of being fined by the federal government. So again, we feel that this is a critical item. Those are like I said, the only 2 items that we have in the governor's office. And we'll open up, see if you have any questions.
Chairman Heath.
Thank you, Madam Chair. So this water litigation is being paid for out of the emergency fund. How did that get to be an emergency? I mean, has that not been going on for 15 or 20 years?
Historically, we have paid legal fees out of the emergency fund. Again, it's not money that we want in the base budget. So we make the decision to work with the legislature on truing up what our potential needs are in the amended budget.
Okay, thank you.
Any other questions from the members? Thank you.
Thank you.
Mr. Harper. Members, we are on pages 184 through 187.
Madam and Mr. Chair, good morning. Thank you for having us and your continued support. Secretary Kemp wanted me to extend his apologies for not being able to be here. He also specifically instructed me not to mess anything up, so I'm going to do the best I can. But to be as brief as possible, our agency has just numerous and meaningful interactions with our shared constituents every day in most of our departments. And as we have struggled, and thankfully we have turned the tide in the last few years and really improved our efficiencies and our abilities to provide a better customer experience in almost all departments. And that is in large part due to your generous support. And again, we say thank you. We see it as our responsibility to provide these in the most these services for, again, our shared constituents in the most cost-effective manner, and I think we've been able to do that. We have no changes to requests, and so I'll be glad to answer any questions if you have them. I know your schedule's tight, and I just want to give you a quick overview, and of course tell you we have no changes that we are requesting again.
Any questions?
Thank you.
Representative Dickey, go ahead. I'm sorry.
thank you for being here. I know you've in the past had some real challenges at the office in Macon, and I think the Secretary of State alluded to the fact yesterday that with some increased funding, y'all added a section and things are improving. Could you talk a little bit about that and the timeliness of getting those certificates and that sort of thing?
Yes, sir. We've been able to. Lori Smith is here, and she's both the brains and the beauty of this operation. So, for specifics, I'll be turning to her. But in general, we have reduced the call wait times and the abandonment rate from a very bad situation into almost 2 or 3 minutes now, maximum wait times on most days for calls. The added section has been extremely beneficial in nursing and getting those nursing licenses and renewals turned around in the fastest time possible.
And that gets to the real crux of my question.
Yes, sir.
Why do we have so many phone calls? Why are nurses having to call so much? What's the problem in getting a license? You know, you can go in and get your driver's license, walk in the door and walk out. And I know it's more things to get a nursing license than a driver's license, but still, why does it take weeks and weeks and months and phone calls to do that?
You know, I would argue with one part of that. It doesn't take weeks and weeks and months anymore, and it doesn't if your file is complete. But to your point, it's not a 1, 2, 3 check the box. It's a fairly significant amount of material for nurses and other professions, especially around secure and verifiable documents and the credentials that have to be submitted and make sure that the educational requirements align with those that the board have set forth. So I think most of the calls, and Lori, correct me if I'm wrong, center around missing items from the application file, and then you get a spike in call volume once renewals come around, and if they don't have it on the third or fourth day, they start calling, and as the closer it gets to the deadline, they'll spike up because nurses have no grace period, and they have to have their license renewed before they're able to go back to work. So to your point, and I agree, there are too many calls, but they're less than they used to be with the improvements in the system and with the added section in the call center employees that are able then to take and dispatch those calls in a much more timely manner than they used to be when the abandonment rate represented was sometimes as high as 30-40%, if not higher.
Is it the licensing boards that are driving all this complicated renewals, and how often are some of these renewals? I mean, is it 5 years or 6 years, or are they doing it every year? Is it something we can streamline? Is what I'm getting at with technology today, and nurses and others getting licenses are very well educated and most part pretty computer literate. Couldn't they manage their own data, license information?
Yes, sir. Excuse me for interrupting. I guess my first question is, are you trying to get me in trouble? My second would be there is and I'm speaking, now kind of from my observations over the years, there is a large part of the requirements for licensure in some professions that are certainly driven by requirements that the board deems fit and necessary. To answer specifically your next question, it's a 2-year renewal period. It's every 2 years for every profession.
And then for the nurses, there's such a large population that we split those.
Right.
So 1 year, a group of nurses renew, and then the second year they have a renewal cycle. So that population's so large. To help with that, we've split them into 2 groups.
Who decides where it's 2 years or 4 years? Is that state law, or is that driven by the nursing profession?
That would be you, sir.
So every
Okay.
professional license is on a 2-year cycle, regardless if you're a nurse or a general contractor. You have a 2-year cycle.
Thank you.
Yes, sir.
Chairman Smith.
Thank you, and hello to former legislator, House of Representatives, Heard County, Coweta, a few years ago, correct?
Yes, ma'am.
Well, welcome. I've been getting phone calls from my constituents about the data breach, and one of the complaints I've gotten from them is it's very hard to find out how to get into this loop to monitor their credit. So I was wondering if we could get specific information for our committee members so that we would be prepared to give out that information to our constituency.
Yes, ma'am. We want you to have that information. I think all of that is available on our website, but if you'd like, I will specifically send to you and the others that information so you have it readily available on your email. Is that okay?
Yes, that would be great. Thank you.
Yes,
and then, of course, since we're in appropriations right now, where did you find the funds in the budget to cover the cost of credit reassurance for our people?
Well, first of all, we were able to, through some hard work by folks in our office, get a really good deal on both the monitoring and the restoration, which was capped at $1.2 million for all 6 million voters. We have, over the last few years, and the Secretary alluded to this or spoke to this actually yesterday, but to recap, the retained revenue that is generated primarily through our corporations division, people over the last few years, and I think Chairman Houston said it best yesterday, is it's a now generation, and people have grown accustomed and quite frankly are demanding to have things turned around quicker, so they pay these fees for expedited service, and those remain in the agency. So that retained revenue is there, and we've been using it to upgrade computer systems, and we actually, in corporations, we pay a significant amount of the salaries out of that division without having to tap and ask you for state, yes ma'am, state funds. So that's and there are some additional improvements that was part of our long-term strategic plan that have now, as the Secretary stated yesterday, I think he said we'll put those on the back burner, take care of this data release issue, and then revert back to the plan to continue to improve processes and IT especially to again promote and improve that customer experience.
So to summarize too, the Secretary of State's office is covering the cost of credit monitoring for 1 year for the citizens who are concerned. And then there was the second part you said?
Yes, ma'am. We certainly feel, and I think this is important, Chairman Smith, that this issue has been contained, but in an abundance of caution, and again, as the Secretary has stated numerous times, to give all of us a level of comfort and peace of mind. The restoration service is there for anyone that might be adversely affected. Again, we don't think that'll be the case, but we just think that's good management and good procedure, and the restoration services are there if there is a problem.
I think that'd go a long way in helping us as committee members to give that reassurance to
yes,
our
ma'am. Well, that's
constituency.
That's one of the first things the Secretary started investigating when we got our hands around this issue was, what to do to make sure that if there is any damage, that it's limited.
Thank you very much.
Yes, ma'am.
All right. Let me ask you about the progress of the IT system that we funded in the 16 budget this past year. What's the progress on it?
Yeah, let me let Lori deals with that every day. Is that okay if she?
Sure.
So the bond that was funded, is that what you're referring to?
Yes.
So the $3.5 million. So And when we received that money, we were in the process of finishing up our election system, our eNet system that we currently use for our office. And then following that project, we had put an RFP out for the eCorp system that we currently use. And so we just launched that July 1st. And so now that that's in motion and we'll finish up that project, then we'll start bidding and working towards the infrastructure to put in place for the PLB system. So that is what the $3.5 million was for.
Okay. All right. Any other questions? Thank you. Thank you both.
Thank you.
All right. This concludes the meeting, and meeting adjourned.